is a big brother and a director of the company. Thank you, Mr. Simeon, for joining us today. Thank
Thank
you.
you.
Thank you, Pixel 5. Thank you very much, Tega. Mayowa, thank you for joining. Ogie, thank you for joining. I can see you. Johnny Agola, thank you for joining. I can see you. Um, Terra thank you for joining. More and more people are joining right now. So this promises to be a wonderful event. So it's a countdown. We're less than a minute away. Ken, Moran, are you ready?
Yeah, we're here. I'm here.
Okay, so I'm going to hand over to you now. Once it's 2 o'clock, you can get started. I'm going to mute myself. You go ahead and.
So let me know when everyone is on call. Then I'll just.
No, it's 2 o'clock. It's 2 o'clock. I mean, it's 2 o'clock already. So you can start.
Okay. Hello, everyone. Thank you guys for joining. Good afternoon and good evening to you all, wherever you are. Thank you for joining us today on the wonderful opportunity from ERIF Capital. My name is Ken. I'm not sure you guys know me, but my name is Ken Moran. I'll be the moderator for this session in the next hour or so. I'm a consultant in technology and finance industry, but I know you guys are not here to hear me talk about technology and finance. So the reason we are here today is to help everyone on this call to take advantage of the potentials Canada has to offer in real estate and investments. So you guys know that Canada is a great place to be, and the economy here is booming. Everything is booming. So you rest assured that today you're going to get a lot of information from the wonderful guests we have today. Just to give you guys a quick format for today, we'll be spending the next hour or so through the slides that we're going to be sharing. And we're going to be hearing from three gentlemen, very experienced gentlemen, with a combined experience of about 90 years experience together. And at the end of this session, I believe you guys are going to have a lot of questions to ask, so be ready. So the three gentlemen we have today is John Akigbe, Abe Salami, and Chuks Okoye. So first of all, let's go through John's profile. He has a very long profile, but we don't have enough time to go through it, so I'm going to shorten it with all I know, right? The best I can do. So as a principal and co-founder of ERIF Capital, John has over 30 years of solid experience in consulting and financial services. He's been in Fortune 100 companies, many of which you know, such as CGI, PwC, which is Pricewaterhouse, as you guys call it, Credit Suisse Bank, just to name a few. Just like I said, he's got a lot of experience. Also, John's experience in the Canadian mortgage industry is very wide. He has a wide knowledge. He's helped hundreds of Canadians finance their homes and purchase properties and give advice on how to purchase properties in terms of the financial side. And this is why ERIF Capital was born, so he can expand his knowledge to people like you and people like us, to help in navigating the Canadian industry. My next guest I'll talk about is Abe Salami. I've known Abe Salami for a long time. He has over 30 years, almost 30 years in financial management and human capital. He's a guy I respect a lot. He's got a background in accounting, in economics, and also in financial management. You may have heard of him before. He's been guest in local radio stations in Ontario, in the capacity as executive director at Swift Mortgages and Loans in Milton, Ontario. He's also a farmer, a business farmer. He owns Motiva Farms and Produce in Nigeria. So he knows what he's talking about when he's here. So you guys have to listen to him too. Last and not the least, Barrister Okoye, Chuks Okoye, I'll call him Chuks. We all know, you and I, we know that we cannot just navigate through international financial waters without the legal side of it. You have to understand the legal areas before you can do things. So he's going to be here talking about the legal side of Nigeria-Canada relationship, how you need to navigate the waters. That's why we have him here. So he's going to be reaching us from Alberta, all the way from Alberta in Calgary, Alberta. Barrister Okoye comes with a wealth of experience in legal practice, Europe, North America, and Africa. He's got membership of various law bodies, including the Alberta Law Society. He also has practice in England and Wales, Nigerian Bar Association, NBA, APCON, IPMA. So that's a list of a lot of things he has membership. He's also a champion in law and business management, and he's been instrumental in navigating and helping startups. He is accredited, like I said before, he's accredited by the Law Society of England and in Wales, and also provides training and professional development for many lawyers. And last thing I have to say is, did I mention that he is also the General Overseer of Godwise International Ministries? Hey guys, we have a packed afternoon and evening for you guys. So please, I'll be learning a lot from this. I hope you guys are going to learn too. And you guys cannot wait to hear from these three guys. So hey, I'll give you guys to John. John, you kick it off and give us your nuggets.
Thank you very much, Ken. And on behalf of myself and the ownership of ERIF Capital, I'd like to say a very big thank you. It will be wrong for me to go ahead without acknowledging the presence of my big brother and the director of the firm. His name is Mr. Michael Osime. I want to start from here because all my life I've been in trust businesses, banking, stock brokerage, doing IT, being able to look at people's treasury, finance, and risk. So I have access to the soul of their business, their financial matters. So today we're going to discuss a lot around investments. What topic are we talking about here? Like Ken has said, it's about it's about investment in real estate as a tool for wealth creation. I chose this narrow topic, not that it's all exhaustive, because if you're going to talk about investments, where I can spend the next 1 year discussing several things I understand in that area. So he has introduced me, but I need to introduce somebody who's much, we need to get a good understanding of the company. Mr. Michael Sime is the founder and CEO of ICMG, ICMG Securities. And ICMG Securities is an investment banking firm out of Ikoyi, Lagos. He has over 37 years investment banking and professional services experience. And he has a lot of interest in oil and gas, power, fertilizer, and financial services. He presently sits on the boards of such companies as Notori, Notori, Millennium Oil and Gas, IPAC Energy. And IPAC Energy owns the most recently built private refinery in Benin. So that's his initiative. I know it started from there. I mean, rather, I was there when the whole thing started. So that said, now let's get to the meat of why we're here. Why are we here? We're here to discuss opportunities in the Canadian real estate market and other opportunities that may present itself. But for us to do that, let's have a reasonable understanding of what Canada is. Canada has 14 provinces with a population of 38.2 million people as at last week, because they monitored the population in real time. And the projection is that by 2025, we have 39 million people. Then by the year 2040, expected to have about 50 million people. Per capita income in Canada is about $49,222. $49,222. And household debt to income means $1.71 to 1 every single dollar earned. What do these numbers mean? By themselves, they're just numbers. And government debt is about $4.2 trillion. Fertility rate, the rate of birth per woman is about 1.5. What do these numbers mean? It means replacement. As long life is expected in Canada, people are expected to live above 70 years, but the women are not giving birth enough to people to replace them. And every developed country requires workforce that will continue to keep it in business. So immigration is high. So for every 1,000 people you see in Canada, about 6.3 are immigrants. So over time, it's been a country filled with immigrants. And what does that mean? Even though as the economy is expected to, the population is expected to increase, they need where to live in. Unfortunately, by this time last year, the pandemic had started. So a lot of things changed. One of the things that changed was lockdown. And because there was a lot of lockdown, people were required, those that were fortunate enough, were required to work from home. What was the impact? People sought bigger spaces because mothers and fathers became totally residential. They became caregivers as well as teachers in school. And for you to make that happen, you need sufficient space because the children are in school at the same time while you're at home. So people started moving away from city centers to further places because you can work from home and your presence in the office was not much needed. What was the implication? And what is the implication rather, not what is, we're still in the middle of it. Demand for housing has increased. Supply has been reduced because a lot of, what do you call this? Permits for new houses, a lot of them were not given. So here in Canada, average prices, even in the States, average prices of homes had increased. The increase has been over, in fact, this 5% year on year has been very conservative. From the last check I did yesterday, it's been at least 10% above increase in year on year pricing. And these days, people are overbidding houses by $100,000, $150,000, $200,000 above what you put in there. I mean, you're asking for. Let's say, for example, you want to sell your home for $100,000. People will come in and bid. They are willing to pay you $130,000. So translate this figure, assuming you are talking about 300,000. Somebody is willing to pay you $100,000 more. I mean, and it's still happening because the demand for homes is still very high. On the residential side, you still have a lot of demand, especially in areas around Toronto. Okay, you guys don't know Toronto well. I'll just give examples. Barrie to Niagara Falls, for example, is over 200 kilometers, about 228 kilometers to be. That's one end. That's north to south. East to west from the GTA is about 150 kilometers. If I go a little further, it's about 300 kilometers. Think about that space, that huge space that people are bidding and bidding and bidding. And the same thing is happening in Vancouver. It's not happening only in Toronto. It's happening in Vancouver, it's happening in Calgary, it's happening in Ottawa, and many other cities. It's not exhaustive. So this has given regulators a lot of things to worry about, and they're looking for ways to cool the system. Fortunately, too, interest rates have gone down. They pretty much had no choice. So there's cheap money. But prices are going up. There's cheap money, prices are going up. So the demand for housing is huge. And even condominiums, people are beginning to come back to the condominium market now, and the thing is going very, very high. So without talking, I've given a little bit of this. I'm going to hand back to Mr. Morwan. I hope we're going to delve further into these things as we go on with the session. Thank you very much. Mr. Morwan, over to you.
Thank you, John. Thank you for the info. It was awesome. So our next guest will be Abi. I don't have to introduce him again. So Abi Salami, please go ahead, and I think you're going to talk about your expertise, the mortgage industry, the financing, and all that stuff. So hey, go ahead. Thanks.
Thank you so much, Ken, for that warm introduction, and thank you, John, for the analysis of what comprises Canada and how Canada is the geopolitical system, the per capita income, and the economy. I'm going to focus more about the per capita income. And I know all of us here, we're not novice when we say economics. Per capita income, if it's high, which means that that is the economy you want to invest in. So that brings us to the importance of what we're doing today. Without no further ado, property management investment in Canada is booming. What does that say? That means that is the most important reason now why we should deem it fit to invest in a more stable economy. When John was talking earlier on, he mentioned about the per capita income. So this is the economy you want to put your investment in. You want to grow with this economy. So today, I'm going to go over the home. I'm going to take you through home ownership journey. If you want to invest in real estate here, either for you want to buy a property to live in there, or you want to buy the property just for investment purpose. And I see that most of our colleagues from outside Canada, if they are not resident in Canada, most people they buy the property for investment purpose. And what do I mean by that? Is we purchase investment with the hope and the target of increasing in value in the future. And this is all what we are about. Everybody, we sow seed and we reap the output of the seed that we sow. So first off, when we buy property, we always say we refer to that property as subject property, because it's different from the property which we live in. If you live in Lagos, for example, or Kuala Lumpur or anywhere, that is where you live. Then the subject property is a property that you have interest in. And first off, how do we do that here? We have to identify the subject property first. That comes what kind of your interest in the property. Do you want 5 bedrooms? Do you want 10 bedrooms? Do you want a plaza? Do you want a condominium? So we identify what the subject property is. And once that property is identified, then we go towards the, we call something APS, agreement of purchase and sales. So then that happens only when, one, if you're purchasing directly from the builder, or you're purchasing an existing property from someone else. So when you have the discussion and you throw your offer in and the offer is being accepted, then everybody agree, then we sign the APS, the agreement for purchase and sales. Then the next thing now is, we already know that we've identified our subject property. We did all the necessary things, signing the agreement. Then the next thing is the mortgage finance, and that's where we come in. Now, I'm gonna spend a little bit of time on the mortgage finance there, because number one, as a foreign investor, there's nothing wrong saying that you cannot pay 100% for the property that you want to purchase. So it's all good. You can pay 100%. But in most cases, people invest. You don't put all your eggs in one basket. So we invest, and we say, say for example, if the property is like $300,000, we will see as someone that is very vast in finance. I would rather advise you that don't put all your eggs in one basket. Let's diversify our investment. So, okay, so this property that I want to buy, I know I have the $300,000 to put down in cash, but I'm not going to advise you to do that. So why can't you put certain amount? But then in Canada, there are regulations. If you are not a resident of Canada, you will not be able to pay for, if you're a first-time home buyer in Canada, for example, you're allowed to put down 5%, but you must be a resident of Canada. You have to be living in Canada. You have right to put down 5%, 10%, or 20%, or even if you would like, you can put everything down. But as a foreign investor now, the rule says that you have to put down 35%. And because you don't live in here, then you're subjected to pay extra 15% as tax. That tax level and all those law that correlates to the payment of the tax, Barrister Okoye will go through that when it's given this speech. Then, first level, let's say, for example, you already identify your subject property. The next thing is to go for the mortgage finance. Then you have to fill the, then you come to, I'm a mortgage broker. You come to a broker like myself. Then you put down all your story. Then I see that you fill out the mortgage application form. When I say fill out the application form, that's we're gonna ask you a bunch of questions. Where do you work? How much do you make? How is your credit like? Your credit history like? What is your credit score? All those things. These are the criteria that we follow here. But again, I'll keep, because the most important thing is to make you comfortable for the foreign investors. There's nothing wrong for foreign investors not to invest in Canada. You can invest anytime, any money, and we are the vehicle to run you through that. So next thing I want to talk about is credit history. Credit history, in most cases, most A lenders, where there are different types of lenders in Canada. We have A lenders, we have B lenders, C lenders, then we have private lenders. The distinction between all these different lenders is based on the interest rate that the investors will pay. I'm gonna go in deep a little bit there. Okay, so now A lenders are the major banks in Canada. We have CIBC, Royal Bank, Scotia Bank, TD Canada Trust, Bank of Montreal. Those major banks are categorized as A lenders, and those A lenders, they either give you fixed rate or they give you variable rate. So I cannot say specifically now because it changes. If you go variable rate is a big lot smaller. Say for example, right now the range is between like 1.04, 1.05. So what I mean by variable rate, when you offer variable rate, which means it fluctuates. If the prime plus one or whatever, when the rate goes up, then that affects the mortgage payment that you're making on a monthly basis. So say for example, if you offer like 1.04 variable rate, and your payment on a monthly basis for your property as mortgage is like $2,000. Next month now, if the rate changes and it's lower than 1.04, your payment will be lower. And if it's higher, your payment will be higher. So in my experience, most people, some prefer the variable rate because in actual sense, it doesn't change, like it's not volatile like that. So, but in my experience, most people, they prefer to stick with a fixed rate. And the major difference between fixed rate and variable rate is not that it is significant, but again, it's more stable. So if you have fixed rate, let's say for example, sometimes they can don't get me wrong here. It ranges. It's not specific. So sometimes it could be 2.04, 2.59, and stuff like that. And now we usually, when they give you fixed rate, and it usually come with the period. Sometimes it could be like fixed rate for 2 years, fixed rate for 3 years or 5 years. So it's variable rate too. But most people, they stick to the fixed rate because income doesn't increase every time like that. So most people, they plan on their income. They know on a monthly basis, I'm making $10,000 and $3,000 goes for my mortgage, $2,000 go for my car payment, insurance and all that. So that's what I said. Most people, they tend towards fixed rate than variable rate. So that is the major distinction between A banks and B bank. So when A banks are offering like 2.59, for example, for fixed rate, B banks will be saying maybe their rate is like 3 point something. And why that? That gets to do with the credit history that I said earlier on. If your credit score in Canada, your grade score will be like 800 and something. Some people, you'll be so surprised. Some people, they have 400 as their credit score. Some have 500. So some 600. For the A bank, they will even look at your file if you have 680 and above. So now, if you know that your credit score is like 640, 620, like that, you know automatically you are not qualified to go for A bank. So now, we as a mortgage broker, we know where to place you. We tell you, okay, your credit score is not. Then we have to have. We ask you a reason. Why is your credit so low? So this is a lot of stuff that we do educate people to make them prepare for the future, because investment is the real thing. So then you have to know how to do your credit score, how to manage your credit properly, so that it's not going to haunt you in the near future. So the next thing I'm going to talk about is proof of employment and evidence of down payment. For people that are in the country, that are resident in Canada, it is very, very important. So as I said about the credit history, if anybody want to lend you $400,000, $500,000, they want to see your history. They want to see that you are able, you can manage your credit properly. They want to see that in most cases, people give, they have credit cards. Credit cards will be like $1,500 credit limit or $2,000 credit limit. If they give you $2,000 credit limit and you're not able to manage it properly, maybe you are late in payment, maybe there's collection on your name, all those things affect the bigger thing. So in the future, now, even if you had your credit for like donkey years and you had in your history, you filed for bankruptcy or you have collection and all that, that affects you. So as we as mortgage broker, we sometimes we have to set up a system. I mean, we have to write a piece of reason why your credit is bad, why you are late in paying your credit. So these are the things that the lenders look at. So can I trust this kind of person? This person was given only $2,000, and if he or she cannot even manage it properly, how am I sure that if I loan this person 500,000, 600, $1 million is going to manage it properly? So that's why they scrutinize the nitty-gritty of how much you're making. What is the what is the rate? How are you getting paid? Is it bi-weekly? Is it weekly? Is it monthly? How are we sure that you're going to be able to pay off your debt when the time is right? So it's very important. So we have a proof of employment. Calling where you say you work. They check the lenders. They will check. They want to be sure. They don't want their money to go because I've been in this business for a while. I've seen people, but they buy property and 3-4 months down the road, they can't even afford to pay for the mortgage anymore. So that's a big time trouble. Now foreclosure is gonna come in. Lawyers that close the deal, they're gonna put heat on that lawyer. The broker, they're gonna say, you told us, you promised us that this person is good. You promised us that this person is credit worthy. What happened? How come just 4 months you can't pay his mortgage? So all those things is very, very, they're all very, very, and there are other factors that contribute as, like criteria for getting approval from bank. So remember I mentioned about the distinction between the A banks, the B bank, and the C banks. So as I said, the major difference is the interest they charge. And besides interest, B banks or C banks, they scrutinize all your documents more than A banks, because for you to qualify for a lender, which means that your situation is almost perfect. No one is perfect. But say, for example, the credit score is like 890. But you have 2 properties already, right? So that is going to affect the TDS, GDS. This is the ratio that they use to qualify you. So if you have 2 properties already and you want another one, so it's not that your credit is not good. It's that, so in some cases you might even qualify for A bank, but you have so much debt that a bank will say, no, I'm not going to deal with you. I'm not sure. So now we set you up for B bank. Even if B bank say no, then we set you up for C bank. If C bank says no, then we set you up for private lender. So we're going to get into that. And Barrister Okoye, we touch a lot about the nitty gritty about the law that, it's all interwoven. And then again, the next thing I'm going to talk about now is lenders classification. I already mentioned it about the mortgage finance. The classification of lenders is based on the ABC and the private lender. And I'll bring you to, we call some people mortgage underwriters. These are the people that work behind the scene. When investors like yourself come to us, we take all your documents, we take, you fill all the mortgage application and all that, then we go through your debt to equity ratio, we go through the TDS, GDS, we are sure that you qualify, we pre-qualify you, then we send the documentation, the application in general to the lenders. So it could be A lender, B lender, or C lender, remember? Then when your application gets to the appropriate lender, then the mortgage underwriter comes in. They underwrite that deal. So they go deeper than what we do. So they'll check everything. They'll make sure that if we give this person the loan, what is the possibility? Is it high possibility of this person paying back or low possibility? So these are all the classification that goes through that. Then I'm gonna quickly mention something to you about appraiser. Say, for example, if you buy property, existing property from someone else, not from the lender now, the property that you buy from lender is termed as pre-construction. Before the lender start building, they'll even sell the property. So we always call that pre-construction. But if you buy from existing, if you buy existing property, which means you buy property from someone that says, okay, I've lived in this property for a while, and the property has accumulated in value, there is equity on it, and I wish to take away equity from my property, then you buy from that person. That's what I term as So that's what I term as you buy the existing property. Then it comes, you have to do appraiser. Say, for example, if that person bought that property 5 years ago for $200,000. Remember, when John was talking before, he spoke about per capita income. He spoke about how Canada is still emerging economy. So the property that you bought 5 years ago, I can guarantee you 5 years later, it's not 200,000 anymore. I cannot say it's gonna double in price, but for sure, significantly, it's gonna increase in price. So that is why it's so the motivation is there for people to invest in real estate. So now you will do appraisal. So when they do this appraisal will tell you exactly what that property worth now. So we call something MLS listing. So, and I know in most countries in the world, before you even sell a property, you advertise the property. There's a body, there's a particular area called MLS. They list all the properties there. And there's price war. There's a lot of tricks and here and there that the realtor that they do. But when it comes to the appraiser company better know exactly what they're doing, because the lenders, they will check. I just closed one property like today is Saturday, like on Wednesday. Okay, the property was listed for $580,000, but there was price war, so people started bidding, and I'll run you quickly through what is bidding. So the property was listed by the owner for 580. That he want to sell the property for 580. I don't know, probably when he bought it, he might probably bought it for 300, 200, who knows? But he listed it for 580. But he knows what is going on in the market right now. It's uptrend. People are buying. It's buyers market right now. So now he said, okay, I'm selling that property. It's listed for 580. So now the appraiser comes in. People they appraise the property. They say this property is not 580, it's more than 580. So now, so many people are now coming. Probably there's so many upgrades, things here and there that it just add on to the property. So now, the property was sold to my client for 720. My client bought it for 720 and was listed for 580. So these are kind of the opportunities that is there when you invest in this kind of economy. It's a win-win situation. So then remember I told you about the mortgage underwriter. When the mortgage underwriter underwrites, then they either send you approval and say, okay, we can deal with this deal, or no, we reject, we decline. When mortgage underwriter say they decline, there has to be reason behind that. As I said earlier, it could be your credit is not good enough for them. It could be your job verification is not good for them. It could be that they don't even trust you. Sometimes so many things associate to the decision that the underwriters take. Sometimes I'm going to give you another scenario. This young lady, the age was like 30 when she wanted to buy that property. Okay, so can you believe that the deal was declined because of they're not going to tell you specifically age, because they see, okay, if you say you are 30 years old and you're making 250,000, they want to see what kind of job are you doing to make that. So something like that. So things like that. So we cannot say specifically, but if you dot all I's and you cross all your T's, definitely is always a better and positive result. So when the mortgage underwriter underwrites and approves your deal, so they send me as a broker, they send me the information and say, congratulations, we approve Mr. So-so-so-so's deal. Then we start running. Then as I said, Barrister Okoye, we talk a little bit about that. So then we send all those deals, we send it to the barrister, because nothing is hidden. So everything is in black and white. So we send it to the barrister goes, they register the property on the new owner's name and all that. And any money that you owe the lender, you pay it upfront, then we close the deal. And that's it. And now you are a new owner and you have property in Canada. But Barrister Okoye, we go deeper about residency, because there are laws that is behind that. So resident, I'm just gonna touch it quickly, and it's about non-resident and resident, the tax that's involved. I would like to let Barrister Okoye to go deep on that. And thank you guys for listening. We're still gonna be here. If you have any question, any question at all, please wait until the question and answer period, and we are ready here to give you satisfactory answer. Thank you so much for listening.
Thank you, Abi. That was a lot of info. I sure did. I learned some things today. So thank you for giving us those nuggets. I'm right now monitoring the questions. So guys, we have a Q&A session after Barrister Okoye's talk. But feel free to paste your questions. I'm watching it, so I'll be asking your questions. I know sometimes we have questions, it disappears. Once you think about it, put it there. I'll look through it. Okay, guys. So next guest to talk will be Chuks Okoye. Chuks, I know you are waiting to go, so please, go ahead. I can't even wait to hear from you. Thank you.
Thank you. I hope you can hear me now. Yes, Ken, can you hear me?
Yeah, we can hear you. Go ahead.
Yes, okay. I can hear you. Yeah.
I want to be sure. Some of us are jittery with technology, so bear with me. Yes. Thank you for that introduction. It is beyond generous. Ladies and gentlemen, I'm happy to have you here, and I'm happy to be here too. It's a good thing when we have opportunity to share, and ERIF Capital has some good intentions and some good plans that will benefit people who are keen to invest in Canada. Today, I'm not going to be talking law, I'm going to be talking solution. And I want you to understand that, because in the midst of all the good potential Canada presents, you have the web of law that can be a hindrance if you don't think through it. So one of that is that because of the bullish nature of the market, the government thought if we don't control this, foreigners are going to invade the nation and buy out the whole properties. And they introduced 15% tax for foreigners if you don't have permanent resident or you're not a Canadian citizen and want to buy property. They will charge you 15% on the cost of that property. So a bit of deterrent to cost more money. But he hasn't really infringed on the progression that is been described by the speakers before me. What this is to tell you that ERIF Capital thought through these potential challenges, and they have in their system the different type of share capitals, which they have the Class A and Class B share certificate, so that instead of you laying out money and saying, I'm buying a property for 500,000 and then you pay 15% of that as tax, you can use that money and invest in ERIF Capital, and they still buy the property earmarked to you, but money is held as investor in ERIF Capital, which is like warehousing the property that investors are buying. It's important to make clear also that there is an option to simply invest in ERIF Capital for slice of the market, not necessarily buying a unit yourself in case, oh my, what happened? Oh dear.
You're still there. We can hear you.
Am I still there?
Yes, you are. We're good.
Oh, I lost myself on my screen, so I got worried that I'm out. Okay. If you don't hear me, just let me know. I will carry on. Okay. So the mission of ERIF Capital is to have a way to overcome these, if you call it potholes or challenges or concerns potential investors may have. So one of them is to give you an option to invest without having to lose additional 15% of your capital investment. We've heard a lot about mortgage and the investment side of things, but the logic of it is, I know my people have a lot of money and they might want to buy it outright because there is always that approach that I don't want to owe anybody. But this is the philosophy of a system like Canada, where you have, if you like, call it debt economy, and to be able to manage debt is good for you in terms of growing your investment. Because if you have, for instance, you have 500,000 to buy one unit and you choose to buy 5 of them and deposit 100,000 on each of them. What this is that you have property, you have portfolio worth 500 times 5, as opposed to using your 500 and buying one unit, so that we get the point. So that way, even in case of quantum economics or in case of substantive value of your portfolio, you are making more money by adopting that option of leveraging on cheap money, as John called it earlier, because you're talking about 2% interest rate on these loans, and that is incredible. So that thinking it through in terms of saying to yourself, I have this amount of money to invest in Canada, but how do I leverage in making the most out of it without really tying the whole capital into one unit? As I said, ERIF Capital has those answers to those questions. Obviously, we are time constraint will not allow us go into great details on the nitty-gritty of this whole scheme has already been structured. But what I understand, as you may know, we are all independent professionals. But ERIF Capital thought through that in doing something like this, he needs to reassure every participant that your money is safe and you are being looked after by professionals. And they gathered us to understand the scheme they have, and we do understand it. And someone like me has thought through the legal implications and know that there is way around the web of laws as they exist now. So the whole idea is that it's intended my firm would act like escrow for the money you want to invest, so that your interest is protected. It's not about giving money to ERIF Capital. You have me, who is a registered lawyer in the United Kingdom and Canada. And of course, I have a lot to lose if I should misbehave, as you can imagine. So that the money you send for investment will be used for exactly the purpose for which you send them. And that is intended to allay any concerns you may have. Having talked about investment, I will also introduce to you the unique opportunity that investment provides in Canada as well, in terms of those who may have interest in migration and want to either send your children or live in Canada or retire in Canada, or have another place you go without having to look for visa or bother about the immigration rules that govern movement. And that is to mention, I'll just kind of mention a few options, but there are many of them. You have what's often referred to as express entry program. You have the federal government running this, and under the PNP, provincial nominee programs, they also operate express entry program. And this is simply designed to attract potential skills. Has already been pointed by Abe and John that this economy needs hands to come and participate and work. And because of, obviously, population is not increasing, so migration is a way of filling those gaps. But they are particular in looking for those who have something to offer. They don't want people they can start nursing and taking care of. They're looking for skills. So there is the Federal Skilled Workers Program, and there is the Federal Skilled Trade Program, and there is the Canada Express class for this program. The details of EEP, as I call Express Entry Program, depends on the angle from where you're coming from. So if you're coming from employer or employment option, like employee side or employer side, or a self-employed person or someone who has his own business, it's a different ballgame. So that will require a detailed examination of your circumstance. Of course, the family class sponsorship has always been there. It's open to people resident or in Canada or Canadian citizens to be able to invite family members like spouse, parents. Well, parents and grandparents don't always it's discontinued under this heading, but there is also the super visa category, which is meant for parents and grandparents, which people resident can always avail themselves. A particular interest may be for the audience of today is the labor market impact assessment workers visa, normally referred to as LMIA. It is simply a scheme that gives businesses from overseas opportunity to actually come and set up in Canada and be able to transfer their staff to Canada as well. What that means is if you are the owner of the business and want to migrate to Canada and want to continue your kind of business overseas in Canada, application is made to the government to consider your business a viable business that will create jobs for people that are in Canada. So that way you're giving the authorization to come and live in Canada and giving you, leading you to permanent residence in Canada. As I mentioned earlier, the provincial nominee program is simply the province is trying to reenact what the federal government already started, because every province have their needs. So they kind of have their own program with their own guideline and their directives, so that if your story is told, one is able to say, you know what, Alberta has a program that fits into your kind of experience, portfolio, and then you fit into that. And you have the Canada Investor Immigration, which is what I think might resonate with people focusing on investing in Canada. And this is intended for high net worth people, individuals who already manage their own business overseas. They have to demonstrate a substantial sum of money. I mean, it varies depending on whether you're coming in as investor, you're coming in as entrepreneur, self-employed person, or corporate immigration. There are all these under the heading of Canada Investor Immigration. So, but to put it broadly is to say, with a capital of about 200,000, you are in for one of those. So if you are able to raise that money, and then you have evidence to show you have a business, and then you have evidence to show that you have managed a business. And mind you, I want you to mark the two words I use: manage a business or have a business. So you don't need to be self-employed to avail yourself of the opportunity. If you are in the managerial level of a business, then you're good. If you are coming in under one of those headings, you just need to demonstrate you're a person of means. Apart from the money that you need to invest, they also will expect you to have money to look after your family. Depending on the number of family or size of family, it's categorized according to a couple and one child, and the husband and wife and 2 children and 4 children. As the family size increases, the money you will be expected to show that you can look after yourself and the family while you're in Canada before your business starts making money increases according to the number of people. So that whether you're young, you're very young, or you're just young, or living the young age, whichever category you fit in, you have opportunity here. I mean, Alberta just started a program. They want to encourage people who graduated 2 years ago, has their own business for about 6 months or 1 year. And then if you are going to be setting up the same business outside of the city, you're just going to come up with 50,000. If it's within the city, the 100,000 is fine. And by this, all they want to do is to see that you have a business plan that is presented to the body that is appointed by the government to assess the viability of your business. Once they okay it, you're given visa to come and start your business in Canada, and that way you apply for permanent resident going forward. So there are those opportunities. I know when John spoke, he focused on property business, but he will be speaking to you more about some other businesses that are of immense interest to the organization. And those businesses are really businesses that will give you a lot of return, and as well sustain possibility of your migrating to Canada. You probably just need to invest certain amount of money into those businesses and you're good to go. So I will not, because as I said, we are time constrained, I'm going to have to say that in conclusion, really, especially in the immigration side of things, is to say that if you want to migrate to Canada, you need to start planning it. It doesn't happen suddenly. I've been in the UK system. I know you can get up and go and just begin to apply. The Canada system has a process where you need to sit down and plan your strategy and value, because it's all point-based system. So to avail yourself of greatest point, every step you take can give you, you need to package yourself, you need to prepare yourself. You don't need to do it in a haste. If you want to do it next year, you start now, more or less, so that by the time you're ready to go in the pool is like where we go enter all your details, and it's evaluated and point is given to everything you said you've done or can do. That way, before you get there, you already put the house together. Even your certificate will be evaluated by the necessary organization in Canada, so that you can get the maximum point. Doesn't mean you can't just say, I have a master's degree in university in London. No, it's fine. But unless that organization certifies it as equal to master's degree in Canada, you'll be losing point. You get some point, but you will lose some. So there is the need for proper planning and strategizing before you even take the first step. That way, you'll be on top of your game and you'll be smiling. So basically, I thank you for this day and thank ERIF Capital for putting this together and giving this immense, wonderful opportunity for people to have what I will call a win-win situation. Thank you very much.
Thanks, Chooks. You know what? I also learned a lot today. Guys, I just want to point something out. You keep hearing dollars. This is not US dollars, guys. This is Canadian dollars, so it's cheaper for you guys, okay? So don't worry about that. So it's not that expensive. It's a cheap dollar we have here compared to the US. So I see a lot of questions, interesting questions. I've tried to respond, but I'm not going to answer your questions because I'm not the expert. I'm just here moderating, so I'll let the expert speak. So if I just start, I know it's about 6 minutes, 2:54 here right now, but I don't think you guys are ready to go now because there's still a lot of information. So permit me, guys, in advance, we might go over because there's a lot of questions and nobody wants their questions not to be answered, to be responded to. So if you just hang on a little bit. So I have a few questions here. So John, Abby, and Chooks, somebody asks, I think Augustine Iwelu, what determines your credit profile? Please explain. So I think this is for Abby,
No,
you can, or John.
Wait, Ken. Can we take the questions after all the presentations?
Okay, that's good.
So that
I'm sure they can wait.
Yeah, so that there'll be, I can. There's a lot more value that I've not discussed that people deserve to know.
Okay, guys. So keep your questions coming. John, go ahead.
All right, thank you very much. The last two speakers have spoken exhaustively about the home ownership journey, as well as issues, the legal issues. And in the course of understanding the last question that Mr. Willie just asked about credit tells a picture of your financial discipline. And it also talks a lot about who you are. For example, it's ERIF Capital. For me, it's a long-term business, and I'm hoping and praying that it gets past the initial founders. So to do that, for us to hold ourselves out that we know our customers, we must do a KYC everywhere. For any financial transaction, you must know who your customers are. So as a first level, because we are based out here in Canada, the one thing is good for me to put that on the table, that we must conduct a KYC. And to do this, I'm in touch with a friend of mine who has a law firm in Southwest Ikoyi, Mr. Patrick Okonjo. I don't know if he's on this line, but down the line we'll introduce him, who will help me. If anybody intends to do any investment, I have to know who I'm dealing with, who you say you are, what you do, validate that the business you say you own, you actually own them, because for me to take for the company to act on your behalf, we must be able to prove that we've done our due diligence. And that's part of the things that credit also tells a story about you, how disciplined you are, who you are, where you have worked, the revenue you say you have made. So that aside, once we conclude our initial due diligence so that we're about to establish a relationship, can you see my screen, please?
Yeah, you're good.
Okay, so I'm going to change the order of this. It's not one, two, three, four, five, six. I'm going to take three as my first answer, first issue. So once we agree that we're going to do business, we must sit down and understand why. What do you want? Do you want to buy a residential property, a commercial property? Do you want to get involved in any business other than real estate, like Mr. Okoye said? And what do you intend to achieve? Is it just for extra income, or just want your family to be here, or you're planning to come down here? Then we will match your needs to the market situation. What do you want? What can the market present? Then we co-create a budget. Let me tell you this, I have a lot of experience in consulting. So forgive me when I'm talking. I have the mindset of the consultant, and a lot of my bosses are here. So please, my bosses, you know yourselves, I won't disappoint you, and my colleagues. So we'll co-create budgets and think of the preferences and create plans. We will determine price points, what makes sense for you. So it is based on that we'll now go to what we have as item number one. We originate the transaction. Once we have identified the suitable property, we determine the market value and negotiate those transactions. Like Mr. Okoye said, the various classes of shares that we have will fit your needs in. So I mean, I won't believe all that has been discussed already. Say it again. I can't hear you. Can somebody mute their phone, please? Can somebody mute their system, please? Okay, so once we.
Oh yeah, the host should mute this person. He doesn't know he's on speaker actually.
The host, please mute that person.
Okay, he's done that. Yeah.
Okay, good. So once we determine, we will negotiate the transaction on your behalf. Of course, all issues around legal framework and the rest of them will be done. Then, in the course of determining negotiating transaction on your behalf, we have to understand the economics of the transaction and what's the process. Are there also any regulatory issues that we must be aware of? For example, if we are, there's something we're looking at right now, a company in Nigeria, they are looking to export some organic products, to be very precise, palm wine. We are at the early stages of discussing that. What are the constraints? What are the regulations? Because we're looking to do huge distributions of at least 1 million bottles in Canada here. If we can do it in 6 months or 1 year, at least 1 million bottles. So those are the kind of things that we're looking to do. I must also let you know that apart from residential commercial purchases and sale, we also help with things like equity takeout. Let's assume you bought a house for 500,000 and it's now worth about 800 or 900,000, and you want to take out 100,000. We'll arrange that. We can also arrange refinancing and mortgage renewals. So I will go now to all of these things that we're talking about. How do we achieve them? We must have very, very clear strategies before we make the right either real estate or business decisions. And why are we doing this? We try to focus on different points where our investors will have multiple earning options. For example, I have about 3 transactions I'm doing right now. We've just concluded one leg of the transaction where we are taking out equity from the property. Let's say the person bought it at 100,000, and the property is now worth about 400 after about 5-6 years. Or I mean, these numbers don't represent facts. I mean, I can't disclose any of this thing, but just figuratively. And we're taking out $50,000. What we're doing for that transaction is a brand new, is a young family. I mean, 3-year-old children. What we're doing with the money that we've taken out is that we're buying 2 other properties where earnings from the rental income for those properties will pay the difference in the equity takeout because it increases your mortgage, and the what do you call them? The rental income will pay for the mortgage and still leave extra $100 or $150 to the property owners. So think about it. Instead of having one property, now you have three. And those three properties are the way your primary residence is not earning you income, but income from the other two are paying the difference. And those ones are also increasing in price. Think about what could happen in the next 4 or 5 years. So it's exciting. We did that transaction, and I did those transactions, and I was very excited. And all things being equal, I'm planning to be out of town in about 3 or 4 days to go and look at another property in Ottawa, where this the investor already is holding this real estate. I think the property is valued at about $600,000-$700,000 today. But we're going to do an inspection. What extra thing can we add to that property to push it up to $1 million? So I hope I'll get investors coming from different sides where we can do a bit of addition or modify the property. We buy that property off, we modify it, and we're able to eke out about $300,000 or $200,000. We don't. I mean, for down payment for that property, we don't really need to spend more than $200,000. And we're saying in about a year or year and a half, we are up another $200,000. So think about the returns that we can get from there. So I'm saying the first thing we do is, as part of our strategy, is to ensure that we have multiple options, or any businesses we do, they can generate sufficient income to pay the mortgage or to pay the expenses from such income generated. Mr. Okoye has discussed migration. So I won't say one more word about that. But what would happen is this: for all issues related to your business plans and the rest of what kind of business you do, we will go out there and look for those businesses for you and ensure those businesses actually make money, so that you won't be under any kind of pressure that you're in a business that does not make money. The business will fund itself. If you pay the expenses, we'll put proper management in place. And ERIF Capital will be in the middle of this to ensure that you can tell a story that's good. Don't come back and tell others. And the third bit is portfolio stability. You might have, I said I was a stockbroker way back in 1996. I was a banker, treasury. So I understand about portfolio management extremely well. And looking all the way to securities trading, all the way to managing your pension and the rest of them. Bringing real estate. Let me say this, let me boast a little bit. Derivatives, that used to be my thing. Bringing real estate to stabilize your portfolio gives you, or buying real estate or any commercial property to stabilizes your portfolio. It gives you that level of comfort that there's a fixed asset that keeps where you can, at the worst case, in the worst case, you have regular income and at least your principal is secure. So that gives you peace of mind. Then the bit that's most important to Nigerians or a lot of people from developing economies where foreign exchange regimes are very reliable, is the fact that you own a home here. If you have children in school and your property is appreciated and you have need for foreign exchange, at least there's a source. So it hedges the value of your wealth that you've created. Unlike, I was at a session about an hour before I joined. My this were old students, trust fund, I'm a member. A lot of people were complaining. They are buying Naira for 500. A year ago or 2 years ago, Naira was about $300 and something to $1 rather. So we kept moving that. Investing in Canada gives you a lot of comfort and gives you a lot of hedge. So it can only get better. I don't even want to say it can get worse. it can only get better. I mean, the numbers are there. That doesn't need much selling. Then, okay, we've talked about that. Mr. Okoye also talked about other business opportunities. ERIF Capital is not strictly a residential or a real estate business. It's a finance business. Right now, the focus is on real estate for this program. But because of the nature of the kind of experience we have, I told you about Mr. Osime and the one I have, and the relationships we've built in terms of network, we're able to help with things like migration. We're able to help in starting up small businesses, mortgage finance. If you go look me up online, you will see me as a mortgage agent. Yes, that's what gives me the license to be able to talk to the financial institutions. So I'm able to do that. We can help with franchise acquisitions. If you want to buy a franchise, we can help you as part of our services. Logistics providers, that's another business we're looking to do. The property management, you bought properties here. You're not going to manage them from Nigeria. We'll set things in motion to ensure that your properties are well managed, all legal issues of paying taxes and the rest of them are done. Then the most exciting thing, short term, we're talking about buying houses and helping people. We're still going to be doing things around down the line, I mean, another year or two from now. We're going to buy land and be building by ourselves. And as part of our short-term plan too, we're going to be buying buildings and renovating. So it's all encompassing. It's exciting. We are in for an exciting time. I mean, if you would love, if you're looking for huge opportunities, please join ERIF Capital, because it's an exciting time. We have the experience. But why ERIF Capital, to be precise? We talked about 30 years that I've done. I mean, as my first job was as a youth service was Federal Mortgage Bank Owerri, 1987, my youth service days. Over that time period, and I'm glad I have Mr. Osime and a few other of my professional colleagues, we have maintained very, very strong discipline. Why must you do it with ERIF? You have other options, but we've maintained very, very strong discipline. That's why a lot of my colleagues are here, my bosses, my colleagues. It's relationship based. I'm not a transactional person. Everything is relationship. We've maintained very strong relationships. And we've worked in the industry. I've worked in the industry that, so I mean, there's very little for anyone, any story they pull over my eyes. We can sit down and negotiate and discuss. Because I have financial services and management consulting experience over 30 years. So we have knowledge of what the industry is, local and international. And I've done very significant work in some companies called Real Estate Investment Trust. Out of, for example, Red Financial Trust out of Philadelphia. I was on the floor helping them with their treasury finance and risk the day in 2008. Was it 2008? Yeah, 2008, when the stock market went down. What do you call it? Citibank started trading for 10 cents. I was right there. And I know, I mean, I can't be discussing the details of those things. When the company made about 82 cents to the dollar of their bonds, I told the guy, listen, you've made so much profit today. He looked at me and said, John, how did you know? I said, oh, because I'm coming here to do Oracle stuff. But I used to be a stockbroker. So as part of what we're saying, we've put things in place to ensure that when you invest with us, nobody's taking your money. We're able to we're accountable, for example, to Mr. Okoye as one of the lawyers, the main lawyer. We have GMS accountancy firm that will do our audits. The principal of GMS happens to have been in Pricewaterhouse out here in Canada. So we're accountable. So when we make commitments, we track our commitments and we provide feedback. And that's the value you're going to get from ERIF Capital. I hope with all this said, when you're making the decision as where to go and how to do it, we can provide our service and provide guidance. Thank you, thank you, thank you very much on behalf of myself and the board. Mr. Osime is right here. There's a young friend of mine that's joining, that wants to join our board. I will discuss with Mr. Osime. And you have our details here. You have our website, erifcapital.com. The office number is the toll-free number. My email address is there, john.ahigbe@erifcapital.com. Our office address is Tompkin Road, Suite 34 in Mississauga. And my personal phone number is 905. Please write down if you need it. It's at the front page too. It's 905-782-9560. I'll display that here again.
It's not actually showing, John. You might have to display better.
What's not showing, please? For me, ask.
What you're displaying, your screen, you may be sharing your screen, but it's not showing.
Host?
But the host should sort that out then.
Okay. Because I thought I had my screen shared. That was the first thing I did.
Unless it's just me not seeing it, mind you, mine might be an issue. I don't know if others are seeing your screen and not me.
No, I don't.
Go to share screen again and share your screen again.
I can't see it. I can't see anything.
No, go at the base of your screen.
Okay, share screen.
Screen.
Okay. I'm sorry.
And then scroll to the
bottom for your details.
Yeah.
No, but yeah, okay, slide, go down, click that one.
Arrow,
click the arrow down. No, on the left.
Right.
Yeah, then click on it. The one you want.
Yeah.
Okay, so yeah, but I also wanted to give my my cell phone 905-782-9560. These are the office numbers. erifcapital.com is the website, and this is my email, john.ahigbe@erifcapital.com. If you will be kind enough, if you want me to send you this presentation, host, can you see the phone numbers and the people that have joined? If they want the presentation, they can leave their email addresses and I will send the presentations to you.
You can put it in the chat.
Yeah, so Mr. Moran, back to you. Thank you very much for listening. And I hope to have you. Hold on.
Okay, thank you guys. Thank you, John, for the info. That was awesome. So we're good for the question and answer now, John? Q&A?
Yeah, so what are the questions?
So there's quite a few. So I'm sure there'll be more verbally, but let me just start. I think you covered the part that says what determines your credit profile. So we won't go into that. That was from Augustine Iwelu. Then there's something from Olatunde. He said, how can non-citizens or residents qualify for mortgage lending? So I think I can throw that to any of you to answer that question. So let's keep it brief.
Abe, please, since that was your topic, I can answer it, but you go ahead.
Thank you. Non-citizen or, as we said before, non-resident. So the rule says that you have to put down 35% as down payment. And that is, again, subject to extra 15% of non-residency tax. So that, I believe, the barrister went through that. And when he was speaking again, there is a way we can circumvent that. So if you're really ready to purchase, then you can get in touch with us, then we take it from there. But the rule says that you have to put down 35% as down payment, and you pay 15% as tax for non-residents.
Can I add to that, please?
Go ahead.
There's a caveat to that, because there's the concept of the greater greater horseshoe area, which comes from Barry all the way to Hamilton. and that's north to south. Then there's east to west, and has Vancouver out there. So if you're a non-resident, you pay 35% and pay the 15%. That is restricted to those areas. But what the government is trying to do now is to increase it to cover all of Canada, upwards to 20%. So it is that law that actually gave birth to ERIF Capital.
Next question, Ken.
Yeah. Okay. So the next one here is let me just go through. There's new ones coming up. I think this is almost the same question. It says, does a non-resident citizen pay 15%? So I think you answered that, right? So it's 35%. I think Teramo is asking, can we get a brochure for this? So John, I'll leave this to you to answer. So Teramo is asking for a brochure. I know we have an excellent website, but John, maybe you can answer this.
A brochure for which one?
For this presentation, more like information.
Okay, yes,
brochure,
yeah. Yes.
Yeah, as I said earlier, put your email there so that will be sent to you directly.
Yeah, awesome. So feel free to lodge your emails, and you can send John an email, that email address that you see. Just signify your further questions and identity. Okay, this is from Olabode. Are there opportunities for fractional investment in real estate in Canada? Are such opportunities available with ERIF? That's an excellent one, John. I think that's...
Yes, absolutely, yes. One of the things that in putting together this whole idea, we took into consideration the fact that not everybody will have the big numbers. So if think about the concept of mutual funds. If there's a property that like the one that I talked about in Ottawa that I'm going to inspect next week, if there's a property that we're going to invest in, we can pull multiple people together. The lawyer is there. We'll like Mr. Abe said, subject property. This is subject property. You are bringing in $50,000 or $30,000, and we're going to acquire that property. Whatever rental income or adjustments, improvements, and after the sale that we do. So you split based on contribution. And we have all the agreements written out. So yes, you can participate in smaller chunks. Yeah, I've answered. Okay.
I think I was on mute. Okay, so I think right now that was the last question, and I'm sure there's going to be open mic session for us to ask questions. So guys, don't be shy. We have John, Abby, and Chooks here, so I'm sure they can answer your questions. So please go right ahead and answer questions. If you don't have, then be rest assured that we'll send you some other information as please. So guys, feel free to ask.
Ken, you have to call. I saw Demola Jimon raising his hands. So
yeah, let him just unmute himself and go ahead with the questions, please.
Yeah,
please,
so you can unmute yourself.
Hi everyone.
yeah,
First I have to say this is a nice one you're putting together, at least to sensitize guys on what opportunities are available out there, and for people to also be able to diversify their portfolios and have some kind of alternative. However, I was wondering, two major questions. When a Nigerian resident wants to get into this sort of things, it means that it's going to convert his Naira to Canadian dollars and send it abroad to you. So that's some kind of capital importation into Canada. And you already talked about, 35% or certain percentage being taken by the Canadian government because you are a foreigner. Talking about the credit part of it, I'm not sure, or I don't know how it's going to work for a guy in Nigeria who is sending his Naira abroad for him to be able to access credit, to buy the kind of property he wants. So I think that's why you were talking about putting together, the fractional ownership and all of that. But my main question really is the capital that is being exported at the time that the guy wants to get out. How easy and what will he be able to get back, or how long will it take him to break even if he has to pay all of those taxes because he's not a resident? Then number two, ERIF Capital, what kind of licenses does it hold in Canada? Because you talked about the fractional ownership, you talked about REITs, you talked about unit trust, because when someone is just sending money and it's coming to ERIF Capital is the one buying the properties and the guy just has, a unit of, So I believe there'll be some kind of registrations and licenses required of ERIF Capital. So what kind of licenses are held by ERIF Capital in Canada? And how do you control the capital repatriation for the guy when he's done? And what's like the average for him to break even if he has to pay all of these taxes that a Canadian resident or a Canadian citizen is exempted from? Thank you. And once again, congratulations on this effort.
Yeah, thank you. Thank you, Demola. From the issue of time, a typical real estate investment will be looking at about 3 to 5 years. And it depends. If you are buying a house to hold, that is exclusively your asset. If you want to hold it for 5 years, 10 years, that's yours. At the same time, too, if you are buying a house to hold, and as you are aware of the 15% non-resident tax because of the golden horseshoe, and it depends on your objective. If yours is income, the first thing I will advise, that's why I said I'll have to understand who you are, what you desire to do. I will buy a house, or rather, we will arrange to buy a house outside of the golden horseshoe area, so that your 35% is just your 35%. There's no punitive, or not rather, there's no golden horseshoe non-resident tax, at least at this time. Then two, with regards to break-even period, that's we talked about Class A shares and Class B shares. The whole remember the what I've just explained is when you want to own the house for yourself and register in your name, and you're buying within the golden horseshoe, so you're going to pay 35% down payment and 15%. That's about 50% right off the bat. So this 15% is where you have issues with, because 35% is part of your equity already. So whatever increase happens is all yours. To avoid the extra 15%, that's why the classification of shareholding is in A and B, where ERIF Capital buys the property and we pay as a Canadian company, either 15%, 20%, or 25% down payment. So there's no issue of the 15% non-resident tax. So I hope that helps. Then with regards to the licenses that the ERIF Capital holds, ERIF Capital is an investment company, not a finance company. I hold a license as a mortgage agent, and that's what gives me access to all financial institutions for me to negotiate with my prospective clients. Anybody can invest in this. The people can set up 10 of us. 10. I mean, you don't need ERIF Capital to pull together 5, 10 people to set up an investment club. But we are providing the vehicle that rather than you run all over the place, we are putting together this opportunity in partnership with multiple people. I'll give you an example. I have a couple of realtors in Ottawa, some here in Toronto. As I have another lawyer, Paul Krume, and I have agreement with someone who does renovation and building. So think of ERIF Capital as an investment club. We're registered under the law. Because we're not selling securities, I don't have to have a license to be a securities trader. If I was selling securities like stocks and bonds, then I would need a license, either as a broker dealer or any asset, any license that controls that. But for me to have access to the financial institutions and sending transactions, you can check that out online. My name is there. You will see Property Finance Corporation, mortgage agent. I hope that helps.
Thank you, John. I'm going to add to that. He mentioned about the turnaround for the investment. Sometimes when you purchase property, if you are here earlier when I was doing the presentation, I mentioned about buying directly from the builder. If you buy from the builder, it's called like pre-construction. In most cases, I have several clients now that they bought reconstruction from the client, but I always ask them to tell the builder they want the assignment clause. What that one means is that when you have the assignment clause, you don't have to close that deal. So before the property is even ready, you can sell the assignment clause. Meaning, if you buy the property for you bought it originally from the builder, say for like $300,000, and 2 months before you're supposed to close, you decide to just turn around and make your money and move. So you can sell that clause, the assignment clause, to another prospective buyer for the going market rate. I just did one like last week. The property was bought for $485,000 and I sold it for $640,000. I'm not saying that is how it's gonna be all the time, but for sure, from the beginning when the builder start building, the property already start, increasing in value. So that is another thing. The turnaround can be as swift and fast as possible. Sometimes if it's like condominium, it takes like years, maybe 3-5 years, because high rises takes a lot of time to build. But all those townhouses or detached homes and all that, sometimes they can build it in like less than a year. So imagine you invest, and again, when you put the down payment down, you're not gonna put all the $485,000 down.
Good. I was going to say that. Yes.
Yeah, they'll probably ask you to put down 20%. If you are buying, if you are not, remember, if you are in when I was presenting, you can either be a first-time home buyer or if you have a property already, then any other additional property that you're gonna buy is regarded to as investment. So you'll be required to pay 20%. So say now you already have your home and you wanna do investment. If you pay extra 20% for a property that costs, that's a case study, a scenario. If the property costs like $400,000 and you have to pay 20%, that's like $80,000. That is the only thing you're gonna pay. Then if you have that assignment clause, before the property is done, if they do the appraiser, if you are here before when there's gonna be appraiser. If they do the appraiser and the property now worth $600,000, so you already made $200,000, and that's how fast it is. Sometimes it takes like 6 months. Sometimes it depends when the builder finish the construction. So time-wise, I know a lot of stuff. A lot of people now, they're asking me they want pre-construction because and they always, what do you mean about this assignment clause? I've gotten so many clients asking me they're interested in the assignment clause because the rate of turnover, they want it to be as fast as possible. I believe that.
I believe Mr. Okoye has a story around that he can tell.
Yeah, I was gonna say, let me chip into that. Before I go into the potential opportunities, let me address part of the question that he asked. I think that was Adeyemi, I think, asked the question we're dealing with. And he did say if you're going to invest in Canada, you're going to change your money and you're going to bring it to Canada, and you want to, if you want to leave, how do you get your money sent back to you? So the point here is sending money to you is not a problem at all. As you know, those of us in diaspora send money to Nigeria every day. In fact, you don't even need to move anywhere. You're just going to go in your account, straight into your account, because the operatives of the transfer of money from Canada, UK, America to Nigeria will only do that as a simple instruction. You're just going to supply your account details where you want the money to be deposited, and they will deposit it and receive the dollar equivalent here. You don't need to have to move the cash. So to exit and to have your money is the easiest part of this whole discourse. So in terms of when you exit, there's no time bar. It's up to you to exit, because at each stage, you're going to know the worth of your investment, the appreciation that you have. It's up to you to say, I want to do it 1 year and I'm off, or you want to stay longer. You may be lucky. The reason he says I have a story regarding this was that in 2019, I think it was November 2019, and some guys approached me, said they're selling this new build. You call it buying off plan or something, so they want me to, they want to market to me if I want to invest. Well, I had some money in the bank, and I thought this money is going to sit in the bank anyway. So how much interest is the bank going to give me? So they wanted me to deposit about 15% of 500,000. Obviously, it was spread for some interval, which I did. Those who know mathematics may come up with probably 75,000 or something along that line. No, it's not up to, so it's actually
75,000.
Yeah, no, I didn't pay 75,000. I think I paid 60,000. So I don't know what percent that is anyway, but that's what they wanted. So anyway, I deposited that money, and just last in March, I said to them, if I want to sell, what do I get? And the developer said to me, if you want to sell today, you're going to get your deposit and you're going to get an additional 100,000 on this deal. So basically what has happened is that my 60,000 has appreciated by 100,000 in less than 2 years. So that the picture is what it is. Having said that, as already been mentioned by Abe, these things are not written in stone. If you're doing investment, you will know that some investment appreciate more than others. So, but the huge potential this presents is that I haven't heard any story that is negative in terms of the property side of things. So basically, just know you can always exit when you want, and you're going to get your money. In terms of what you're going to get, it's always going to be predicated on the value of your investment as at that day. So ERIF Capital have a strategy to update investors annually in terms of the worth of their investment, so that if you want to exit, either someone is going to buy you out, or we're going to have to liquidate the investment and you have your money. So there's a mixture somewhere I want to correct, because when that was mentioned in terms of buying the shares in ERIF Capital as a Class A share capital, for instance, where you have a property you bought, so that to liquidate your assets is to sell that property, or to liquidate your investment is to sell the property. So you don't really need to worry about that. What has happened is that, as already been explained by John, is that ERIF Capital bought that property in the name of ERIF Capital. Therefore, you are able to boycott or overcome the possibility of paying the additional 15% tax. for buying because you're not resident in Canada. That's mandatory. Abe mentioned 35%, which is mandatory because when you're not resident in Canada or you are not a Canadian citizen, the assessment of your credit file is difficult. So that rate is placed as what in the UK world is called a non-status mortgage. So it's like nobody's checking your credit rating anywhere. It is a rate plucked from the mindset that at 35% of the value of the property, they're not going to go wrong. If you don't pay this mortgage, they're going to get their money and your deposit will be in trouble because you didn't keep up paying the mortgage. The reason they want to do credit profiling is to be sure you know how to manage debt. And therefore, they are confident that if they give you this money, they're not going to worry about you keeping up payment. So the bank doesn't want to sell your property. That's not that's not what they are set up to do. They do that as a matter of what else can we do? We're going to get this money back. Their best business is for you to take the loan and continue to service it, and then service it till a fluctuation of time, and then you keep the property. That's their best position. So, but when there is default, they have to recover their money somehow. All the credit file profiling and deposit is to just, if you like, mitigate their risk. So that if you're one of those bad borrowers, then they're going to have to sell. And mind you, they're not going to go to sell like a broker will want to sell at top value. They want their money back. So they can, once they know, okay, if we sell this property 10% less than the market price, you've put in 35%. So there is still 25% to play with. So once we fling it, we get our money. We don't care. We just want our money. So that's why that rate is there. But what ERIF Capital is offering is that if you come on board, you don't necessarily need to come up with 35%. Because what is going to happen, like he's talked about, know your customer. Your circumstances will be discussed, and then you're able to commit money through ERIF Capital. And because it's a going concern in Canada, they're not going to be required to pay 35% to buy a property. They're going to be required to pay less. So if they, for instance, go to pay 15%, and you're saying, I can't come up with 35%, but I want to join your deal. Okay, can I pay 20% to ERIF Capital? So you go close this business. And we have internal agreement with ERIF Capital that covers me that this property is mine, provided I keep paying this amount or until this amount is paid. So that way you're stepping into the business earlier than you could have, or if not, if I may put it the other way, you're stepping into the business when it's possible you never could have in any event. So this is the opportunity that is presented in this discourse, so that we understand the angle from which the ERIF Capital is coming in terms of this. He made clear before that again, as I said, they are not asking you to pay the money to them because they don't have trust fund. Somebody asked of licensing. It's made clear already by John what they are doing. They're business people running business as investment organization. In terms of licensing, other professional body that has license to handle a client money. And that's where we come in as a legal professional, because we have trust fund and we have license regulated by the law societies and the law to keep your trust fund in accordance with the law. So that if you are, I mean, I know John talked about know your customer, but be honest, before I touch a dime from you, I'm going to ask a lot of questions, because the regulatory body will want to make sure that it's not money laundering. I have to answer that question, that you have legitimate business and you are a man of means, and these are evidence that I have that you are not dodgy. If I cannot satisfy that, I'm not touching that money, because if they have to knock the door and say, hey, who is this guy that deposited 500,000 in your trust fund? I should be able to satisfy the regulatory body that you have business and this is what you do and this is the evidence you have given me. So that way, that money is kept in the trust fund until you say to us in writing, you can disburse that money to ERIF Capital for the deal that I have discussed with them. And these are the deals, and then we disburse the money to ERIF Capital. So that way, it's all above board, and the transaction going forward is going to be in terms of the agreement you sign with ERIF Capital, whether as a Class A or B share capital, or an internal agreement. Like he said, no, your customer is a case of saying we are flexible in terms of your needs. So when you come and say, you know what, I don't want to do this, I don't want to do that, but this is what I want to do. And they say, okay, let's speak to the lawyer and see if this works. And then the lawyer looks at it and say, yeah, there's nothing against that. If you want to go into agreement that in 5 years, you're going to come up with more money and pay ERIF Capital, and then ERIF Capital transfer that property to you. And then you want to do it that way, we'll structure an agreement that covers that, so that it will not be a sale, it will most likely be in lieu of your stock or your shares with ERIF Capital. The title to this property is being transferred to you. But mind you, that transfer cannot happen unless you have paid in full if you had mortgage. But if you did a cash purchase, then there's no hindrance. ERIF Capital is simply going to have to undertake to sign those agreements and give you title to that property in lieu of the shares you've bought in the company. So basically, they are paying you your stock with that property. So that way, we're able to navigate the potential additional 15% we talked about before, and the chances that you may have to need to pay 35% deposit in the onset. So I guess that throws more light to the whole system as it's structured at the moment.
Okay, can I jump in here, please?
Yes, go on. I'm done.
Okay. For everyone who's worried about the, what do you call this, the non-resident tax, there are also ways out of it. Once you've paid, let's assume you decide to buy the property in your name and you pay the 15%. That tax is refundable within 4 years if you become a citizen or a permanent resident. Take, for example, you have children in school here. You want to buy a property for them. Or you buy it in your name. There's nothing wrong, absolutely nothing wrong. Buy it in your name. You pay and remember, everything's within the Golden Horseshoe area. From, you guys don't know, it's about the 300-400 kilometers radius. You buy it in your name and you pay the 15%. For as long as within 4 years, they get permanent residence, that money can be refunded. On the other hand, if you buy it through ERIF Capital, the day you become a resident and you want the property returned to your name, all well and good. Mr. Okoye and the other lawyer, they will make that arrangement and return the property to you. We pay all the taxes. But the one thing I want to make sure that we all have, it's an investment. Like everybody said, everything depends on the strategy. Once we have a clear idea what you seek to achieve, and we agree whether it's going to be short-term or long-term. If it's short-term, we have to look for short-term investments that we can actually do, and determine what that short-term means. Because remember, for every transaction we're doing, there are issues around licenses with the cities. So, and that period can take 6 months to 7 months or 3 months at best. So we have to be mindful of that time. I mean, it's an investment. So I would always advise that you please have a 2 to 5 year time frame in mind, so that nobody's under pressure and you achieve your investment objectives. It's not, I'm not buying cryptocurrency here that I can go into there and go out tomorrow. So it's an investment. But at this time too, I would like to let everyone know that we have a lot of partnerships to ensure that we cover the market extremely well. And I would like to please acknowledge the presence of Mr. William Akwete. He's a custom home builder and renovation expert. So he can make your $700,000 home to look like $1 million. I've seen a lot of his work and I've been very excited. I have Mayowa Adelolu. She's a realtor in Ottawa. So when we talk about identifying a property, somebody's out there who will physically go identify the property, look at the features, and get back to us. Kelechi Amadi is here within the GTA, and we have Mr. Paul Krumen alongside with Mr. Okoye. So we'll handle our legal issues. So I have for my KYC in Lagos, the checks, my friend, my childhood friend, Mr. Patrick Kunjo is here. So as much as I want to do business with you, and like Mr. Okoye rightly said, I also want to ensure that I know who I'm dealing with. I'd like to, Mr. Omoron, I hand back to you. Thank you.
Okay, unfortunately, there's a technical issue, and Ken could not even have visual.
Yeah, I think I'm back. Yeah, I'm back.
Okay,
Yeah, but yeah, I was without cable, so I lost power on my computer, so I had to plug it back in. Yeah, well, thanks everyone. So John, are we? Let me see if we have any questions. I think I see 3, but not sure if.
No, let him ask the questions.
Yeah, I think maybe you answered it already from Victor.
What did you say?
About investment certificates to be traded outside. Yeah, I think maybe you have covered it.
No. Let me answer that. No.
Let me read out. It
Okay.
says, are potential investors giving any certificate of investment? Can these investment certificates be traded outside your organisms like treasury bills? Lastly, you have been discussing about the ease in disposing or selling your property. You didn't talk about the challenges of getting a willing buyer or a short-term interval.
Okay, so I will take the last, then the first. The good thing about the Canadian market is that as much as real estate is not cash or near cash, it's very liquid or semi-liquid. So most times you have people who wait. I mean, I don't know if you joined when we started with the economy. The population is rising. There's huge demand for housing. There are some houses that sell within 2 days once they are listed. 2 days. I remember Mayo. I mean, the realtor in Ottawa. I remember about 3 weeks ago, a condo that I was looking to buy for one of my clients. They put 274 for the condo. We went in at 340. We couldn't buy it. The eventual buyer bought it at 365. And it's been like that over and over and over again. The only thing I must tell you is that as part of my strategy, I want to be the one selling at that high price, not the one chasing upward movement of prices. So I will go out, look for good deals. I'll call my friend William Akwete in. I'll call my friend William Akwete in. Can somebody mute there, please?
Yeah.
Can somebody mute there, please?
Host can mute it. You can actually mute it. Okay, it's muted.
Okay, so we are going to look for transactions, homes that we believe are distressed or below market value, and we'll invest in them. But if it's a place you want to live in, so you want to bring your family in, all well and good. We'll go. Remember, we were going to talk, identify your objectives, and then we'll move on. So we can always discuss that much later. So then the liquidity of your investments. We are not traded on any exchange. If you want, what do you call this? If you buy through ERIF Capital and you want to sell, we'll always look for a buyer. And more than likely, as we do these investments, remember we're going to earn income. So our trading level, I mean, I was a stockbroker, so I can tell you this. I'll make sure I do not overtrade. And I'll always do, what do you call this? My cash flow, I'll do my cash planning. So that if you come to me that you want to sell your house, I can go to the bank and take cash and pay you out. But you cannot take my certificate and give to somebody else unless you find a buyer. So we can do private sale. That will really be up to you. But we're not traded on the exchange, so you cannot be traded in the public place. When we get big enough, maybe. But right now we're a private entity, less than 50 people in ownership. I hope that has helped. Ken, back to you.
Okay, so guys, I really thank you guys for coming in. So John, maybe I'll let you do the closing remarks, and yeah.
Okay, all right. We gathered here we started at 1 o'clock, if I remember correctly. No, 2 p.m. I'm sorry. We started at 2 p.m. and we've had about 1 hour 55 minutes of discussing opportunities in this market, the Canadian market. I must tell you that I'm very excited that you guys have attended. Do please, and I say please again, take this as an opportunity we're presenting. It's not ERIF Capital alone that can do this, but the things that we're bringing to you, why you should make this decision, is discipline. It's the first step. Knowledge of the markets we operate in. And we're accountable as well as value that we create. You either want to earn revenue, you want to bring your family in here or bring your children or take care of them. I realize that all this effort will come out of your sweat. Working with you, understanding your needs, assessing your situation, we will work tirelessly to ensure that we match your objectives with what this market has to offer. On behalf of ERIF Capital, our partners, my friends that are here present, my director, our intended investors, I'd like to say a very big thank you. With us, you would lose. With us, you would not lose. We'll work with you every step of the way. Thank you for coming. Have a good evening and God bless. Bye for now.
Thank you. Bye. God bless.
Thank you. Bye-bye.
Bye now.
Emeka logged in. I saw his name. He was a partner with PwC, retired last year. Retired, relocated to Canada.
Shall I end the meeting?
Yes, please.